Good morning once again, and welcome to the Haven Financial Group radio show. I'm Larry Colvig, founder and CEO of the Haven Financial Group. On with Glenn Ramey today, our insurance specialist at the Haven Financial Group. And Kim, there's a lot of information covered today. It may seem overwhelming. There might have been some terms that people didn't understand. It's okay. You don't have to do it alone. We can explain things. And oftentimes, even for myself, it can take 1, 2, 3, a variety of different times, and then refreshers. And that's what we want to spend time doing, is help people understand why or why not, the pros and the cons, the good and the bad, and specifically in this segment to avoid some of these costly insurance mistakes that people make in retirement. And unfortunately, we see it far too often.
Absolutely. And that's the time when, unfortunately, we can't go back and rectify those mistakes a lot of times because time is of the essence. So let's talk about some of the mistakes that you guys, between the two of you, that you have seen people make and that you really hope people can avoid. Glenn, let's start with you. What do you think is the number one mistake people make when it comes to their health care?
Not planning for the entirety of their healthcare cost. Oftentimes, people will budget in the premiums. Well, we have to pay per month to have insurance, but that is not the only cost we're going to incur in that healthcare, right? I have clients that have certain medications that meet the limits of their policy now, starting in 2025, of $2,000. So did they incorporate an extra $2,000 guaranteed per year cost in their budget in their retirement planning? And to go back to a topic we were talking about earlier, the long-term care cost. Again, did we incorporate that cost into our retirement planning, or do we, again, sticking our head in the sand, hoping that it doesn't happen to us?
Mm-hmm. Sure. I think also another mistake, and again, these are those constant deadlines that you don't know if you don't do this on a regular basis, but it's got to be missing the deadlines for, all of these different things. Enrollment, which we just came through in the fall. And I realize now that there's another opportunity at the beginning of the year for some different kind of enrollment. Talk us just through a little bit of that.
Yeah, so we talked about when people need to enroll into Medicare, right? Based on their turning 65. And one of the most confusing things about that is, when don't I have to do that, right? And the only scenario you're allowed to delay your Medicare without penalty is because you have other insurance, either through the federal government, through programs like TRICARE and VA for people that have served in our military, or for individuals that are still working, but not just any job. It has to be a larger employer. 20 or more full-time employees have to be at that company for me to be allowed to delay my Medicare without penalty. Right. So are we in a position where we're even allowed to not take those benefits when we're turning 65? Another real quick one I'll mention here is individuals that might think, because I don't take any prescriptions today, I shouldn't have to buy a drug plan today. Right? I shouldn't have to pay for something I'm not going to use. And I remind clients, it's not just about a penalty, which you will incur by not having a drug plan in place. It's that they don't allow you to sign up whenever you want to. So if you chose to delay that insurance option, well, in June, if you get that health diagnosis that says you have a new $1,000 per month medication you have to pay for to stay alive, and you thought, well, I don't need it because I don't take any medications, right? You don't get to sign up for insurance for July. You're locked out of that market till January 1st, incurring the cost of those medications and further penalties for not having had that insurance in place.
Glenn, I have a question for you related to the 65 and Medicare. If you're still working and you're getting your employer's benefits, you can stay on that. What about your spouse? Maybe your spouse is...
Yeah,
okay.
Sorry to interrupt, Kim. So sorry.
No. So your spouse is on your plan. They can still continue to stay on your plan.
As long as you are insured by someone's employment, your own or your spouse's, allows you to delay your Medicare.
Absolutely. Let's talk about long-term care. You said one of the biggest mistakes that people make is just not making a plan and not taking care of it. But let's say that you have some kind of plan. Where do you see things going awry?
So often it's going to be, is it enough? Did we bridge the gap? Right. Are we preparing for how long we might be in a facility? Now, to help individuals with what that number might be, well, the average stay in a nursing home is 3 years. So do we have at least 3 years of benefits in our long-term care? But God forbid we're not just a physical impairment happening to us, but we have memory issues, right? We might be physically healthy, but our memory is going, right? And now we need supervision to make sure we're not a harm to ourselves or others. And that window of care, of memory care, might be 6 to 8 years before passing away. Again, are we really planning for all of those costs or doing something about it? So again, did we plan? And if we planned, was it enough for planning for that event?
Glenn, briefly comment on how Medicare should not be confused with long-term care.
Yeah, I say all the time that Medicare is about recovery and recuperation from a healthcare event, right? Not the lifetime maintenance of our healthcare needs. So Medicare says if you are hospitalized first for 3 days or longer, you're eligible for up to 100 days of nursing home, referred to as skilled nursing benefits, for rehab. But the statistical average actually paid by Medicare is 27, not 100 days. And that's again because it's about recovery. The moment that therapist in that facility says this patient's plateaued, they're not getting better anymore, no more measurable improvements, Medicare is going to cut that therapy off. And I might need help permanently with what happened to me. And now I'm on my own for those care costs and needs.
Mm-hmm. And what about first off, I don't know how you even plan for that, Glenn, how long you might need that. But let's think about this too. What do you think that people plan for inflationary issues associated with that? Because that could be 15 years from now.
No, often not. The insurance industry and the products there are available with those kind of mechanisms that you can put into policies, but there's individuals that have static benefits. So again, I talk to clients who might use that life insurance model as a plan for their long-term care with a rider. Well, that's a fixed benefit. If I sell someone a $100,000 life insurance policy today that has $4,000 per month in long-term care benefits for them, well, 20 years from now, it's still a $100,000 policy with $4,000 in benefits. Have we adjusted for the purchasing power we've lost over that time because our benefits weren't changing over that time?
These are tough issues. And again, issues that maybe you don't even know to think of, right? Because you've never done this before.
Yeah, I would agree. And a couple that I'll briefly point out that I've seen and we've seen for years is, as mentioned earlier, complacency, human complacency, not reviewing your life insurance, just being complacent. You haven't even looked at it in 20 years. Failing to update beneficiaries. It sounds so elementary, Kim, but I see it on a weekly basis. People that have accounts that have no beneficiaries. Well, I don't know who to put. Well, put somebody. You can always change it. I've seen ex-spouses as beneficiaries, unlike family members as beneficiaries. Make sure they're current and make sure you have something. On the note of Medicare and healthcare, again, human complacency, not shopping it out every year.
Mm-hmm.
You know, there's numbers out there that Americans pay roughly up to $700 a year, too much for the healthcare because they never got a second opinion. And you know, the sales approach. Somebody sold you something. Well, salesmen sell something oftentimes maybe you don't need, where if they're educating you, laying out all the options rather than trying to push one company, maybe that's a better way to don't get sold something, but you get something that you can actually benefit of. Those are really some big mistakes that we see.
Sure, absolutely. Well, listen, we're not trying to be gloom and doomers here today by any stretch of the imagination, because these are all issues that can be worked out in a positive way for everyone, but it's hard to make these decisions on your own. We started this show out by talking about partnerships. There's deadlines, there's changes. It's a constant, always evolving industry. And you need somebody who studies this on a regular basis, like Glenn, like Isabella there in the office, and like you, Larry.
Yeah, we covered a lot of insurance today. I realize that. But really at Haven Financial Group, where our focus is on all the retirement puzzle pieces. Yes, insurance was the focus today, and it's a big one for a lot of people. But we're now coming into tax season. And we do lots of tax planning. That's added value that we offer at Haven Financial Group. Lance is our CPA. He's gearing up for lots of tax preparation, successful tax preparation, because we've done planning. He loves to explain things. estate planning stuff, wills and trusts. I mentioned we just had 2 full classes. Carrie, Anna, and Keith are estate planning attorneys. Wealth management, stress testing those portfolios. What does the stock market have in place this year? Where are you in the timeline of life? Are you well positioned, ill positioned, or maybe you don't know? And then are you paying too much for what you're getting and you're not getting the quality time with those that you maybe have partnered with? And what does a partner really look like? Are you getting that partnership? Are you getting the assistance? Are you getting the information? Or you're saying, I only think I got together once a year last year. That is just simply not enough.
Right. So if we have struck a chord with you as you've listened to us this morning, first off, thank you for being with us. And secondly, give them a call there at Haven Financial Group. 612-504-8400 is their number. Set up a free consultation. Go in, meet the folks there, enjoy a lovely cup of coffee and a warm cookie, and talk to the experts there about what it is you are trying to accomplish in your retirement. You can also go to havenfinancialgroup.com. Glenn, it's been a delight.
As always, pleasure.
Thank
Kim.
you, sir, very
Kim,
much.
great to be with you. We look forward to next week. Have a blessed week.